Options Trading Group 2. Today is Tuesday, November 24th, a couple days before Thanksgiving. So welcome, everybody. It seems like we have a full house. Just a note of housekeeping. Because of the Thanksgiving weekend, I'm going to cancel the roundtable that I was going to do tomorrow because a lot of people are traveling on Wednesday and everybody's kind of in a holiday mood. So I figure we'll just take a week off from the roundtable and hit it again next week. So just a FYI for that. So with that, how's everybody doing with the trades, markets, et cetera? I know Andrew and I were talking a little bit before everybody got in. I was basically doing a Weirdor and Rhino and Kevlar. I've got, may as well just share my screen real quick.
Tom, you're breaking up.
Oh, am I?
Yeah.
Okay, well, maybe let me call in on my German phone. So as Joan Rivers used to talk amongst yourselves, I'll be right back.
Okay.
Okay, I'm back. How's that?
The quality's not as good, but maybe you won't break up. It's that old WebEx thing when you call in using a computer and it gets above about 15 or 20 people, the host starts garbling for some reason.
Okay, well, hopefully you can hear me.
Yeah,
so,
you're good.
How are you doing, Curtis?
I'm doing okay. I made a really big mistake the beginning of last week. I shorted some futures to cover a trade, and I shorted exactly twice as many as I needed to, and just, got underwater in some futures contracts. So I've been selling puts furiously against that.
How's it
Other
going?
than that, all my trades, all my regular trades are doing great. That I'm really happy with this SPX trade. I wondered what your experience was with the Rhino trade, how you're doing with that.
Yeah, it's actually pretty good. I can, let me share my screen. I can try it again.
I went back and listened to Brian's original presentation and looked at the PDF of the PowerPoint, and when I started to backtest it, it was a lot more adjusting than what I was seeing in his presentation.
Okay, so I've got three different trades on. The rut, I've got a Weirdor and a Rhino, and then a Kevlar type of trade on the SPX. So I'll just go through each one of them. So this is what the Rhino looks like. It's, or maybe it's a Kevlar. They're all kind of about the same. I think this was a Rhino. This hasn't had any adjustments yet because it hasn't gone up far enough. But you can see the trade's doing fine. It's basically just a broken wing butterfly. Market hasn't moved that much. The Weirdor is looking like this. Here's the expiration, standard deviation. So that's in really good shape. I might roll this up a little bit to raise this up or just exit the trade fairly soon. But that's looking fine. And the way I'm actually managing it is more by the Greeks. I'm not doing it independently per se. I'm just looking at the combined risk graph and say, okay, that looks pretty good as a combined trade. and the delta minus 20, that's fine. I don't know if that's necessarily what it used to be in the old option view, but it's not like 100 or something, and the graph looks reasonable. Even if I zoom in a little bit.
Just for laughs, what setup are you using in option view?
Let's see. Wait, I got to go on the model, right?
Small and moderate. Wow.
Is that your Rhino in January?
Yeah, I could set it on large. The reason I have it smaller is more because of IB and the quotes get a little bit lower. So if I change it to large, it's still about the same delta. Let me turn the live quotes back on. Okay, it changed about 5, so not too big of a change.
No, not bad. I was just curious.
And then the SPX trade looks like this right now. It's I don't know if I don't really believe these that T plus N line at T plus 26, I guess it is.
Yeah, those lines don't look right, Tom.
They do look right?
No, they don't to me.
Yeah, they don't look right to me either. So
no.
I do believe that it's above where it should be. So right here. So it's still going to be profitable. I took some of the profit out of this trade that it made and raised this up a little bit. So there's hardly any risk on the upside anyway. But if it stays much above this outside the tent, then I'll probably peel off some of these and just raise this up a little bit or add some more verticals on the downside. Maybe do a combination reverse Harvey and peeling here just to kind of lift this up a little bit. But, I want to keep it a little bit bearish because we run up so much. So I'm just assuming it's going to pull back a little bit, and if it doesn't, then, I've still got 50 days to go in this, so there's plenty of time. There's no rush. It's one of those watching paint dry kind of trades, which I like. So that's what I have going on, and they're doing well. They're up a couple $1,000, and the Greeks are under control. The risk graphs look fine, so that's it for what I've got on.
Looks good, Tom.
Okay. I have a couple more people I have to promote. So I anticipate the market's going to be kind of quiet the next couple of days, so hopefully we'll get some theta coming in. How are your trades doing, Ron?
They're fine. I can show that if you want.
Yeah, sure.
Hey, Tom, before Ron jumps on, can you address the questions in the chat?
Oh, yeah, let me look. Let's see. Which version of option view? Oh, I think I've got the latest one. So it's 7.72, the professional version, which probably doesn't make much difference. So I scale the delta limits based on number of tranches. Yes, but I'm not strictly watching the deltas. One reason is I'm not sure if the deltas are right from option view. So I'm more looking at the, just from experience of where it is relative to the tent and the shape of the T plus 0 and T plus N lines. So I don't really have strict delta limits per se. Just kind of looking to make sure I don't get on a slippery slope. And John says we seem to be getting P&L and T plus 0 on a variable volatility model. Yeah, I'd have to check. What am I on? Great.
Yeah, I think what he's referencing there, which was my question as well, is your gram dot was matching up with your T plus 0 when you're on the VAR setting with this new screwed up version.
Oh, right.
They're almost never matching. So did you have
Hi, Tom. I don't know whether you can hear me, but Yeah, Stephen's got the gist of it there. I was quite surprised because we've all been labouring for the last few weeks under the under a significant distance between the dot and the 2+0 line. Yeah, based on an assumption that we're sort of using an averaged, according to John Locke, some sort of simple arithmetic mean between Greeks that appear as a result of EIOIO and variable.
Well, one thing I do, I don't know if it's what John does, is on the skew, the vertical skew, I use 1 day's worth of IV numbers, so that probably keeps the gram dot closer to 0, I'm guessing.
Yeah.
Maybe the style of it's not working for me. And Stephen, I'm pretty sure I can speak for you as well, can't I, on that point?
Yeah, I think it's the trade structures. Yeah.
Maybe it's the trade structures. Yeah. I was just going to say that.
Guys, remember also that having the dot not match the line is completely normal. This has been.
Sure.
It's not.
It is, but not to the degree we've seen.
Yeah, exactly. And
I've
got a bearish butterfly, a rock, and an M3 on, and there's way more distance than we ever had.
Okay.
Has anyone tried the danger of turning this into yet another option view discussion? But I'll press on until I'm stopped. Has anyone tried? So I've got a backup laptop which is running an edition of OptionView about 5 versions back, I guess. And OptionView 7 folder itself is basically like the app. You can just move that around anywhere you want, and that's fine. But has anyone tried taking just 2 folders from within that, the assets, and there's one other, I'd have to look at it, and sort of transplanting that into an older version of OptionView and doing a comparison?
I know of Jay Winger that's been doing that kind of thing. Yeah, he's basically got an old version that he's got up and running. He's doing comparisons between different versions of OptionView and showing. And that's his proof, basically, to show to Len Yates and various others that no, the model is not back to normal, or it hasn't just been rewound.
Okay. Oh, and he's actually getting the OptionView functionality. So there's not a sort of server-side compatibility issue between the old version and say a new cert.
He's managed to get an older version. I forget what the version number is, but it's prior to all of this craziness, and he's got it up and running fine.
Yeah.
Even though it's not going to be officially supported by OptionView, obviously, but when he compares through Backtrader the modeling based on nodes and various other things that he had from his prior backtesting, he's found that it does match. So it does seem to be pulling valid data using the old model, not the new model. So I think it's a viable comparison.
Understood. That's interesting, Ron. I'm going to try doing that. I think seems to make sense.
Yeah, you may want to get in touch with Jay, because I think there's something special that kind of has to be done in order to get that working. I forget what that is, but he's figured it out.
Okay.
This may be obvious, but you have to use the old OptionView files. You can't be using cross each version. You have to use the same set of asset files, basically.
Yeah, he's using a completely separate OptionView 7.
Yeah, there you go.
Yeah, the entire thing. Yeah.
And you have to be careful not to delete those asset files because you won't get them back.
Right.
So if they get corrupted, you're in trouble.
Sure. Yeah, you need to take a clean backup copy. I think it was the records folder and the data folder within the OptionView 7 folder.
That sounds right.
Well, in other words, you can pluck those 2 out and transplant them into an older version and still achieve functionality, I think.
Yeah, well, the records, that's just that's the trades, like the T-logs and all the other associated files that go with each account that you set up, right?
Yeah.
Yeah, those have to match the version that you're looking at.
Well, if you can't transplant those in, as in just your sort of current trades, as it were, then you're going to have to just take the old version complete and retype in your complete trade log for any particular trade, I guess.
Jay gave me a copy of 7.64 that I've been running, and I have my current M3 in it, and what I did was I used Backtrader to go back and recreate the trades, and then I manually typed in the correct, exact times and prices and commissions, etc. And it seems to be running.
Okay, got you. So you didn't try and get clever and bring in any of your your current option view subfolders into it.
I was afraid to play around with it.
Right.
Unfortunately, I don't have any of my old trades, but right now I only have one trade on, which is a December M3, and I have that in in this version of option view.
Just out of curiosity, Andrew, is your trade, is your gram dot below the T+0 conspicuously in the older version, or is it up closer?
Well, I mean, when Ron finishes, I'll show you.
Yeah, go for it. You can take it.
Oh, okay.
Because it's liable to be similar to some live trades that the rest of us have on.
Okay. Okay. Let's see. Yeah, this is 7.64, and this is my current M3. Let's see. I just want to go in. Now, these are John's original settings. Everything is large. Let's see. Here, I just want to make sure everything is correct here.
And you've got those CV numbers.
Yeah, that's what I was just looking at. Yeah.
Yeah, gotcha.
Yeah. I noticed that, the 30 days seems to change around quite a bit. The back ones change a little bit. But, I mean, this 30-day has been up and down by, 5 to 10 points, just about every day.
What's the graph look like?
Okay. Now that's the graph. I mean, that's, normally what I used to see all the time.
Mm-hmm. Yeah,
I agree with that. That looks to me like an old style separation that would be explainable and acceptable.
Right. Now, just for fun, I can close this down and run a newer one and see what it looks like too.
Are you able to take a quick screenshot of that just to preserve it?
Yeah. Okay. Now, let's close that down. Okay. I mean, you can see the difference already in the delta.
Yeah, I didn't note it, to be honest. Sorry. It's a lot more negative on this, is it? Which is what we'd expect.
Okay, now, actually, that doesn't look that bad.
The separation is not noticeable. It's the more negative delta, isn't it, that is noticeable?
Yeah.
Yeah. Yeah, this is 7. I just want to make sure this is 7.72. Let's see.
Is anyone the biggest variation I'm getting is probably biggest separation between the gram dot and the T+0 line is probably apparent on my current rock trade, I would say. Is anyone else noticing differences between different styles of trades?
I mean, that's pretty close. It's actually much closer than I expected.
It is.
Sure enough.
The bearish butterflies, John, are still pretty large gap.
Actually, I'm just going back through these three positions. You can cancel that. They're all way off. I mean, you wouldn't expect on an M3 just a 10 lot. You wouldn't expect a $1,600 gap after being in the trade for 4 days, would you? I mean, it's. But I'm gonna run this comparison on the old version I have.
Okay, I'm gonna save this. Now let's close that down and go back.
Yeah, see what the deltas were.
I don't know if this is related through to what you're seeing here, but you may want to investigate the possibility of a couple of more variables actually being involved here. So, for example, right now you're purely looking at two things. You're looking at the T+0 and the Graham dot, right? When I was running my trades, and my trades are M3 style-ish, right? So, you know, John Locke kind of style. What I was finding was wacky stuff that went beyond those two variables. So, for example, my entire expiration graph I found would move up or down, typically down. And actually, sorry, it was higher than what reality was.
Oh, no.
And my current P&L, so in other words, the Graham dot itself, when I would, it used to be relatively close through to what Toss would say natively, right? But then I found that it was off by hundreds of dollars, right? So when you're now basically saying the distance between T+0 and Graham, you actually may be looking at two extra variables, which is maybe your expiration graph itself may be higher or lower, and the Graham dot itself, even though you're assuming that it's actually accurate, compare it through to your trading platform to see if it actually does match or not, because, again, mine was off by hundreds of dollars.
The expiration graph. Now, that's a new...
Yeah.
New
this is why I got sick of the whole thing. I said,
we're going backwards.
Driving me nuts. I know.
Man, that's good to know, though. Something to check out.
Well, I mean, now you can see the difference. You know, the new one is minus 92. This one is, you know, bouncing around minus 64, minus 59. And in toss, it's minus 40 using the variable.
You mean individual setting?
Are
you on Smile?
No, volatility Smile. I'm sorry.
You're on Smile.
Yeah. Let me just make sure. Yeah, volatility Smile.
And Andrew, I assume every other setting is the same between these two examples. So extent of strikes and the volatility model and combined call and put skews. Everything's equal, is it?
Actually, let me just make sure. Yeah.
The volatility Smile setting in TOS will give you about a 25% higher P&L, I've found.
Yeah. You want to do P&L with individual on TOS and Greeks
right.
with Vol-Smile. Yeah.
Right.
Yeah. I mean, we're going from minus 30 with every individual option, minus 60. So actually, it's pretty close to TOS if you do what John says and average them out. It's pretty close to the TOS number.
It is all getting quite boring nowadays, isn't it? This I have to admit.
It's ridiculous.
Admit, you know, yeah.
It's 3 tools, average them out, and then stick your finger in the air.
You'll be going back to trading futures directionally, Stephen.
Yeah, no.
Oh, wait a minute. I made a mistake. I forgot. I'm on the old option view. You shouldn't have to average them.
No.
So there is TOS is definitely, showing lower delta than the old option view. Right? This is the option. This is the option view that we were using all this time without questioning it.
Yeah. And I'm getting. I mean, I have to use IB. I'm not a U.S. citizen, as you can probably tell, but so I'm probably in a fairly small boat along with Tom. But the P&L that I'm getting from an albeit via an Excel plug-in into an Excel sheet using an arithmetic mean of bid and ask is now on the 722 version of Option View is now replicating the P&L much more closely than it was over the last 2 weeks as these changes were being made. So that, for what it's worth, seems to be fixed. In other words, a 7.22 EIOIO is relating well to a brokerage readout of actual P&L.
And are you guys hearing that there is a new major update in the works in the next week or two?
Oh boy.
That's what.
That's right. Well, not in the next week or two, but we've been told roughly about a month.
Okay, before year end. Okay.
Yeah.
Actually, I just realized.
But I've also heard that Len Yates is reluctant to go back to the 764 type modelling. It's a complete clean slate.
Correct. He says it's too difficult to go back, and he's looked at the code, and he can't figure out why he can't rewind it. So he says,
was he drunk? Was he drunk when he wrote it the first time?
It makes you wonder about, code revision and all that kind of stuff, right? So,
Ron, you're going to have to offer your services as a consultant and get him sorted out.
Well, you know what? I mean, Jay pretty much has been a free consultant for him. He's been doing a ton of work, right?
Really?
And
wow.
with no extra benefits there. He's just wanting to get this thing fixed, right? And he's put in a ton of work into it.
Yeah. The other thing that's a little disturbing is in John's last presentation on the topic, he was saying that they're trying to match the skew curves using the VAR setting or for the variable model. And John's contention is so there's that debate.
I mean, it
going
depends,
on.
right? Because what the theoretical Greeks are doing are real IV points, right?
Mm-hmm. Mm-hmm.
Which is what Option View has been doing forever, and this is the reason why John Locke has been using Option View instead of using TOS, because he's basically said the model of EIOIO is rubbish, right? And I think anyone that's actually compared those models can validate that with John Locke style trades, if you try and do it with EIOIO, you'll get completely different Greeks. I mean, from positive 50 through to minus 150 kind of thing, right? When you compare the two. So we know that we need more accurate Greeks. We can't just go back to EIOIO. But what Len Yates is saying is that he's wanting to improve the curve best fit even more than prior versions, and he wants to put in all these new ideas that he's come up with now to get hopefully something that's more accurate, right? Now he's saying that he couldn't figure out a rewind to get us back. So he basically says this is a waste of time because I'm planning on changing the model anyway in order to bring in all these improvements. So let's just look forward rather than backward. Right.
Yeah.
I mean,
and Ron, what's the progress of ONE? How's that coming? How are they coming along? Do we know anything about that?
Yeah. I mean, I get updates pretty regularly from Andy, and I just got a brand new private beta just this morning, which I haven't looked at yet. The guy is working his butt off, right? So it's been fantastic. So he's engaging with various people. Jay as well. Poor guy is for Andy as well. Various other people I know, advanced traders. And on top of that, the advanced traders are all following John Locke style trades. So this is why you get things like the fact that there's now a combined call put skew kind of tick box, right, in one now. So in order to appease all the John Locke style traders, right?
Yes,
So
I guess, yeah, understood. And I guess there might be sort of two conflicting path work here. You know, what one might be as Len seems to be following, in other words, to come up with just an even more representative vol model that's more realistic, if you like, which would still cue a revision of John Locke's existing guidelines, for example. And the other school of thought being, let's get it back to where it was with option view 764 and earlier.
I don't, you know, if Len's goal is to become more essentially like what TOS is, then, you know, that's a problem because we know that the TOS model is very problematic.
Okay, all right. So two things on that. Number one is, if you're referring to EIOIO, he's not trying to make it more like EIOIO, right? So that's point one. Point two, though, is that when you say that TOS is inaccurate, again, look at vol smile and measure it. Not just have an opinion of saying, well, TOS vol smile is saying minus 45 or whatever it was in your case, and option B was saying, you know, 65, so therefore it's wrong. Measure it, right? And I've been doing that, and I found that the TOS vol smile model has given me more accurate P&L than option B. So it's not a matter of trying to make it match, right? It's a matter of just finding what's more accurate.
And the Greek trends, you're measuring that as well. So you're saying the TOS smile is forecasting Greek trends as good or better than option view?
Correct.
Wow.
How long has that volatility smile feature been available? Is that
Forever.
something new?
No, it's been there for a long time. It's just that not many people actually knew about it, including me. I only found out about it just a couple months ago.
Tom, do you have a view on interactive brokers? Have you tried fiddling with the vol settings, for example?
I use TOS. Yeah, I don't do IB. Do you mean to Tom? Sorry.
Yeah, so I was asking Tom.
Are you talking about using Risk Navigator?
Yeah, perhaps, but with I mean, I don't think Risk Navigator would work. It's not enough granularity in the graphic it produces, but just some way of so even the IV that's and the Greeks that are shown on the option chains, if there's a way of changing the volatility model to something that might equate to the TOS vol smile.
Well, I mean, Risk Navigator doesn't really give you much choice. I mean, here's the same position in Risk Navigator.
Yikes.
Yeah, that's about as much use as a chocolate teapot, isn't it?
Hey, Ron, when you were showing those trades before, or maybe it was Tom, those were iron configuration, and that's when it was referenced that the construction of the trade, because it was iron, would not suffer from some of these problems.
Yeah,
I don't do
right.
irons at all.
You don't. Yours are all put. Okay.
Yep.
Yeah, mine weren't irons either, but there were some longer and shorter time frames mixed together. Maybe that made a difference.
Well, the Rhino is by nature an iron configuration.
No, it's not.
It's not?
Nope.
No, it's all put.
I mean, it shouldn't matter, right?
Yeah.
But the models are forcing us to make that distinction.
Well,
Yeah, maybe I'm thinking of something else.
No,
You
I
may
mean,
be
John
thinking
did
of
mention
the
that,
Kevlar.
Curtis. You're right.
Yeah, John's mentioned it, but if Curtis, you may be thinking of the Kevlar. So Jim Riggio tends to do irons with the Kevlar, but with the Rhino, it's all puts.
Okay.
Yeah, that's probably it.
Yeah, I don't know what model IB is using. The delta is actually pretty close to TOS, but the theta and the vega are off by quite a bit.
Mm. Have you compared Greeks for discrete options in the IB option chains with those in the TOS chains?
Well, let's see, what do we want to look at?
I don't think it's the kind of thing you want to look at now.
Look at well, we could look at the December at the money, 47.9.
The thing is, you got to think about what you're comparing, right?
Yeah.
You're basically, by looking at the TOS platform and the IV of a particular option, you're looking at the mid-IV. That's what option B calls mid-IV, right? That is not what you're going to be looking at for your Greek trends or for any of your Greeks, right? It's the projected IV that's going to be leveraged for all of that, and that's based on the model. Right?
Well, I was really wondering, Ron, about how the Greeks, the IB Greeks compare to the TOS Greeks, really, I suppose. That was all.
Right, but what you're looking at in that case is you're doing essentially an EIO-IO comparison between the IV levels of each option. Is that what you're talking about?
Sure. Well, what I'm wondering is if you guys who are able to use TOS have got a workaround, as in by using the two different volatility models on TOS, one for your Greeks and one for your P&L. Then right. I'm just wondering if there's a way of doing that with mimicking that with IB. That's all.
Do they provide different models? Do they let you go between vol smile and individual?
There is an alternative vol model. I'm not sure whether it's customizable though.
Okay.
Yeah, I don't know. Settings. I've never really played around with this.
I haven't, because from the moment I started using IB, I was using option view for everything, so I never got into the innards of IB.
Yeah. The default of every platform you'll use out there is going to be EIO, right? So unless they give you the ability to change the model, then you're not going to get accurate Greeks, in my opinion. Not for a complex position, anyway.
No, it's a fair comment. Yeah.
Yeah, I'm just looking around. I don't see.
John, do you have access to one option there?
I don't. I did try it, but I couldn't get it to work past my antivirus software. So I gave up about 6 months ago. But I've since changed my AV software. So I'm keen to try it again. I mean, my suspicion is that they'll work on this version, get it working, and then sort of reprice it, won't they? I would have thought.
Yeah, but I'm pretty sure. I think he's got a 30-day trial or something. So at a minimum, you'll be able to download. Mind you, you want to download the beta, right? Not the standard release. And the beta will give you access to Greeks that are pretty similar through to what TOS Volsmile is saying.
Okay. Right. Thanks. Yeah, I should try that.
Actually, Andrew, do you mind if I quickly show something while you're still hunting around there?
Yeah, go ahead.
All right, so I don't mean to beat a dead horse kind of thing, but I'm still getting people asking me this in the forum, so I want to show it once more time. All right, so I kind of want to show this, again, just kind of so that people understand what I mean by measuring stuff, right? I think people are still a little bit confused, so let me kind of just delete slices here. Reset to normal. All right, so by default, these slices are going to be at plus 10% and minus 10%. So the easiest thing to do is to set slices to this one, right? So basically up 2 sets of price points, then neutral and then down. So if I click on that, that's very skinny, right? But then basically go here and change this to 10 points up, 20 points up, minus 10, minus 20. Okay? So once you've done that, you've now got a nice representation here showing you what the P&L will be at each one of these points. 10 points up, 20 points up, 10 points down, 20 points down. Okay? Now, what you want to do, so that's step one. Step two is to then figure out what your real P&L is, because I'm currently on Volsmile. So I'm going to change through to individual. Okay? And my real P&L right now is 834-ish. Let's call it, well, 800-ish, okay? So so that's step two, right? Figure out what your P&L is. Then you can go back through to standard for Volsmile. Okay, and then this is saying 1100-ish. Okay, so there's roughly about a $300 difference between my real P&L and what Volsmile is saying. Okay, so in other words, this is overestimating my profits by $300. Okay, so all you would do now is that you would basically just take a snapshot or a screenshot of this screen, and then tomorrow, if price moves down by 10 points, right, then you'll be somewhere over here. And then all you're going to be doing is that you can see here that this basically says that at this point you should be at a profit of roughly $1,200, but you know that this P&L graph is overestimating profits by 300. So you would subtract 300, and then you would compare that real P&L tomorrow to your P&L that you're actually seeing on screen, right? So that's how you would do it in TOS. In OptionNet, you do exactly the same thing. So there's your same position, right? Your real P&L is actually on the same graph, so you can see it kind of down here, right? But that's going to vary a little bit, but it's, again, roughly $800, right, as we saw before. But then if you take a screenshot of this, then you've got your P&L on this line here. So there's no need to actually, set slices or anything like that. Okay, you see everything there. In OptionView, it's exactly the same thing. Okay, so you can take a screenshot of the three if you want, and then by simply, again, transposing the difference between real P&L and the T+0 on each of the platforms, keeping aware of what that is, and then checking your profits tomorrow, that's going to tell you exactly which modeling is more accurate. That's it. It's not more complex than that. Okay? So it's not about saying, well, there's 20 points difference between OptionView and OptionNet. Who cares about that? What matters is which one is the most accurate, so that you know which one to focus on.
But is it still more accurate with a 30-point gap?
Oh, yeah, I understand where you guys are coming from. Yeah, I mean, if you're seeing differences with the way that it used to work before in terms of the distance between the Graham dot and the line, that's probably a clue telling you that something's wrong, right? All I'm getting at here is people tend to not have any confidence in TOS, as an example. As I was in that same boat, by the way, right? I used to think, there's no way that I'm going to track my Greeks with TOS, but just measure it, right? And then that's a way to ease your concerns, right? Plus, it's a way of verifying whether, the Greeks here in OptionNet are decent or not compared through to OptionView.
Are you also? Yeah, go ahead, John.
Well, I was just going to say, I think the real issue, if I just chance my arm at speaking for many people, is not really necessarily getting an accurate view on a P&L or sort of is one readout of a set of Greeks more accurate than the other. I think the vast majority of people probably just want to know the answer to a simple question. What do I need to do to be able to trade John Locke style trades or his exact trades, even on a platform?
Yeah, I agree. The thing is, the reason that I'm saying about tracking P&L is because by tracking P&L, that will tell you which delta was actually more correct in the prediction, right? Therefore, it's a complete reflection on Greek trends, right? I don't mean to just focus on P&L. I mean to focus on P&L in order to figure out which model is giving you better Greek trend predictions, which is exactly what you're talking about. That's exactly what you need, right? Because
except the price move, the P&L difference won't be purely attributable to delta, of course. So if there are different interdependencies in different platforms between each of the Greeks, that will further complicate it.
Right, Ron, does TOS handle CEV at all?
Well, okay. The thing about Volsmile is that they don't give you any tweakable options, and therefore you don't know exactly what's in it, right? But again, all of that being said, by just tracking the Greek trends, simply by looking at the P&L, I found that it's quite a decent model, right? In the same way that I've been tracking OptionNet to validate the fact that what Andy's doing is definitely improving things, right? So it's quite a decent model too.
Not to dirty this up, but you also have to take into consideration the environment, because I believe it was 2013 that there was no big deviation between OptionView and TOS. So this is sort of a static view to some extent. It may last for years, but if you get another skew shift, then the Smile TOS, in theory, may not be as accurate as it is today.
Are you
which is where
referring? Okay. When you say that
you know what I'm saying?
in the past it was different, are you saying that you were looking at
There was a point, I wasn't using John's stuff, but there was a point in time when there was not a big difference in the deltas between TOS and option view. And then all of a sudden there was a structural shift in the market.
Right.
And the TOS model could not account for that.
Yeah,
and so
that issue showed up in late 2012.
Okay. So what I'm saying is maybe that is part of what's explaining why you're seeing quote unquote better performance or better Greeks in TOS today, but that doesn't necessarily mean we'll be that way tomorrow if you see another structural shift. That's all I'm saying.
Sure. The big question though becomes, were those observations made with vol smile or was it done with individual implied volatility? Because if it was individual implied volatility, as everyone has been using, because I didn't even know about vol smile until recently, right? So if you're comparing it through to individual, then absolutely there's difference. And I can show you that right now. I can show you, huge differences in delta between individual implied volatility and vol smile, right? So individual is extremely inaccurate for John Locke's trades, even now.
Yeah, you're right. I'm not sure what the comparison was. I would guess it probably was individual back then. Yeah.
John covered that issue a few times in the mentoring sessions, and if you have access to those sessions, you could, go back and look at those videos and see if he shows you the TOS settings.
Yeah, I actually kind of communicate with John Locke one-on-one, and we've had these kinds of discussions as well, right? I mean, he has, as I've posted on the forum, he gets hung up about the fact that they don't combine core-port skew, and I think it becomes a bit of a religious issue personally. Based on my testing, I've not found that to be more accurate, even on option view, right? And I've shown John the results, right? But he's still sticking to his guns, saying that his tests previously in the past have shown that it was slightly more accurate, and the same thing with the students. So
then the question becomes, if you've done all your back testing using that, are you basically committed to continue using that? Even if it's not, as accurate, if all your back testing is done using it, then shouldn't you continue to use it?
Yeah, I see where you're coming from. Yeah.
And to me, Andrew, that is the absolute crux of the issue. I don't care what the model says, but my back testing is the foundation, and because if you use the model given today, you got to do all your back testing again.
Yep.
And so that, to me, is the whole issue. I don't really care what it looks like. It doesn't need to necessarily match what it was before. It just has to match the back testing. And so, yeah, that's the whole problem.
Well, it should hopefully be both, right? It should hopefully match the back testing and match reality. Because you can back test something, it's just a video game, right? Because then when you trade it live, you're going to be losing money.
Yeah, but when they keep shifting the sand under your feet.
I see what you're coming from.
Yeah.
And like I said, get ready because, Len is changing it again in a month, right?
Right. Well, if you have a set of rules that were created, with a certain model, even if that model is not 100% accurate, those rules in essence are making up for that. And, you change the model, you've got to change the rules too.
Right.
Or find a new model.
or find a new model, yeah. So, Ron,
because if you find a new model, you've got to go back and do the back testing over again too.
Not necessarily, because again, if you go on the assumption that the model was quite accurate before, matching reality, and I think that's a pretty fair assumption, okay? Because if it didn't match, then people wouldn't have had any confidence in that back test at all, right? So let's start there. So if we basically assume that the back tests were based on a model that reflected reality pretty closely, if we now see the fact that due to changes the model is not reflecting reality, then the simple thing to do is simply to find a model that actually is reflecting reality. And if you put those two things together, it's a logical conclusion that you don't actually have to change your trading system if you're now using a model that's more accurately reflecting reality. See where I'm going? You don't necessarily have to go back and do another 1,500 hours of back testing, right? Because on the assumption that those two premises are correct, right? I've not had to do any of that, and I'm simply doing the exact same trades in exactly the same way. None of this craziness of saying changed to irons and change this, change that. No, I'm doing everything exactly the same, and the trades are working out exactly the same way.
But isn't it fair to say that you're only looking at a static environment? You can't go back and back test the smile setting in TOS.
Yep.
We have the volatility environment that we have today. In other words, I'm not so, and I totally agree with what you're saying, Ron, but I'm just thinking that it could be a little bit myopic in terms of evaluating TOS and saying that it's a better fit today. That's not as exhaustive as being able to back test, look at different environments, and then conclude, hey, this model is pretty accurate, right? Because you're only looking at the last 4 weeks, so.
You are, but again, remember about the video game thing that I just mentioned, right? Because you can backtest something, and when you're backtesting, you're playing a video game, right? And you're putting all of your faith into this video game on the assumption that this video game is going to match reality. Because if you've been backtesting a model that's inaccurate, I don't care if you've got 2,000 hours of backtests that show that you're profitable. If you then trade it next month, you're going to lose money if the model's inaccurate, right? So that is hugely important to me. It's not just about a matter of saying, how many hours of backtesting have you done? No, it's how reflective of reality is the model.
Yeah, I mean, we may have crossed in the night here on that point, but what I'm saying is, in other words, go back to a different volatility environment with TOS and then see if it's still quote unquote correct.
Sure.
I'm not talking about just back testing period. I'm talking about the actual environments. Does 2013, does 2011, summer of 2011, I think we forget, every quarter is different. The SKU structures change, the markets change, and the models either will or won't keep up with it.
People were trading M3s with TOS for a long time until they couldn't.
Yeah.
So it's hard to conclude that TOS is smile. It may work today, but we don't know, will it work in tomorrow's environment?
Yeah. And in the grand theme of until Galileo came along, everyone thought that the planets revolved around the Earth. Are you guys not tempted to go back to the old model and find a copy of
that's exactly what some people are doing.
What I mean is, if we'd not set out on a voyage and we still believed the Earth was flat, to use yet another simile, would we all be totally comfortable? Because it's a valid point. Because perhaps if this thing had never happened 6 weeks ago or whenever it was, feels like 6 years ago now, perhaps we'd have utter trust in OptionView and its ability to cope with different volatility environments, different skew environments, and so on and so forth.
Yep. The problem with that, though, is that OptionView is not giving you a choice. They're making some upgrades mandatory, right? So, if you want to be supported by OptionView, then that's not something that's viable today.
You're just going to have to give up the support.
It is risky. Yeah, exactly.
Yeah. What support exactly are you giving up?
Well,
right?
Yeah, it's a good point. But I'll tell you what happened to me. So I've actually got two copies on two different laptops. I fouled the first one because I didn't realize that the OptionView 7 folder in its entirety was a complete substitute for the whole application. But anyway, on opening that, I wasn't forced to take the mandatory upgrade because it was a couple of versions back beyond that point at which it was made mandatory to update. So the chances are you'll be able to soldier on with an old version if it's old enough.
Yep.
Then at least, and Ron, I totally take your point. I would love to, in an ideal world, I'd like to have a platform that has probably the functionality of OptionNet from what I've seen of it, rather than the clunkiness of OptionView. I'd like a ping pong ball that sits on my T+0 line. And I'd like to know that if theoretically, in any case, if the price moves here, this is what's going to happen to the Greeks in reality. That's what we'd all like. But if that means what people are worried about, as you say, they're mixing everything up. the people are really worried, and maybe even John Locke's worried about this. I don't know, because it's not a, I must admire his cheerfulness under adversity, because he sort of says, then that's what we'll do. We'll go back and do it. But that's a hell of a lot of work. I mean, it's a monstrous amount of work.
It is.
I mean, so far it sounds like OptionNet Explorer at some point in the near future is going to be a very viable substitute.
I think so.
Yeah, ultimately, OptionView is going to be extinct. They just are.
Because, I mean, you can go back and get an old copy of OptionView like I'm running, but the problem is, number one, if the asset file gets corrupted at some point, that copy is useless, and it also becomes useless with the next mandatory upgrade.
Oh, I didn't know that.
Well, I agree with your first point. So your first point, Andrew, you're saying that if you had cause to suspect a corrupted asset file and you DA'd it, and then you wanted to start it again, it would, because of the linkages with the new back-end modification, it would fail.
It'll become incompatible because you can't get the new data.
Yeah. Okay. But I think if you go back far enough, and I think you probably are on your second point with six. What was it, 684 or whatever you just showed?
I'm running 7.64. Now, here's the issue. When that mandatory upgrade, if you were running any prior version, you had to upgrade. You know, it was a mandatory upgrade. It was because it was not a model change, but because of a server change. Now, what happened was, once you went to the next upgrade, it was no longer mandatory. So you were able to skip over. But the next time there's a mandatory upgrade, you're going to be stuck having to do it.
Yeah. And it's not a very sort of pro way to conduct your business, is it? Let's be honest.
Now, hopefully it'll be a long time before the next mandatory upgrade.
I doubt it.
Yeah.
Again, he's talking about a model change.
Well, the model change is not a mandatory a model change doesn't have to be a mandatory upgrade. You know, a mandatory upgrade is something like, you know, a data server change. You know, something really substantive that changes the program. You know, you can make a model change, and you know, you can make it, you know, a new tick in settings, and leave the old model, you know, depending on what they want to do. But, you know, model change doesn't automatically mean a mandatory upgrade, because remember, we had changes to the model before. Remember, a couple of months ago, we had that issue where the one upgrade was causing all sorts of craziness in the P&L, and then they fixed it right away.
Didn't he say in his presentation that from now on he will give the option to upgrade or not?
Yeah, he alluded to the fact that he would try to have that be less restrictive than what he was planning on originally, but he didn't necessarily say that there would be no more mandatory upgrades.
Well, I'm sure at some point there is going to be a mandatory upgrade, because you know they're going to do something, you know, at a very basic level to the program. But we don't know how long. You know, it could be next week, next month, next year. You know, how long was it from the last mandatory? I can't even remember the last mandatory upgrade. It's been quite a while.
Hey, before we wrap, I just want to say, hey, Ron, I'm probably speaking for everybody. We really appreciate all your insight and expertise on this topic. You've been a real valuable source on this this issue. So much appreciated, Ron.
No worries.
All right. And,
I think it's likely, Stephen. I agree that I think probably if OptionNet get their act together and produce something that's good, I think there's a very high chance of OptionView going out of business. To be honest.
Yeah. Agreed.
Well, with that, I think we're about out of time for this week, and we'll see you again next week, and enjoy the holiday for those who are celebrating Thanksgiving. So thanks, everyone. Really nice, lively conversation today. Really appreciate it.
Thanks, guys. Appreciate the input.
All you have to do is bring up OptionView, and you'll know you're going to have a lively conversation.
True.
Right.
All right, everyone. Have a good holiday, and we will see you next week.
See ya.
Say, Tom.
Cheers, Tom.